On January 16, 2025, the financial world was shaken by an unexpected announcement. Hindenburg Research, the activist short-selling firm known for its daring exposés of corporate wrongdoing, announced its closure. Founder Nate Anderson cited a desire to spend more time with family and friends as the reason for the shutdown. The news sent ripples through the investment community, marking the end of an era for a firm that had become synonymous with holding powerful corporations accountable. Hindenburg Research, founded in 2017, had made a name for itself by publishing meticulously researched reports that often sent shockwaves through the stock market. Their targets ranged from electric vehicle startups to established conglomerates, leading to significant financial losses for the companies involved. Their investigations, often focusing on alleged accounting irregularities and fraudulent activities, led to numerous regulatory probes and shareholder lawsuits. Hindenburg Research's closure leaves a void, raising questions about who will fill the role of watchdog in their absence. One of Hindenburg Research's most high-profile investigations involved the Indian conglomerate, the Adani Group. In 2023, the firm published a scathing report accusing the Adani Group of engaging in brazen stock manipulation and accounting fraud. The report sent shockwaves through India's business community, wiping out billions of dollars in market value from the Adani Group's listed companies. The Adani Group, led by billionaire Gautam Adani, vehemently denied the allegations, calling Hindenburg's report a calculated attack on India. The fallout from the Hindenburg report was swift and severe, with the Adani Group's stock prices plummeting. The controversy also sparked a political firestorm in India, with opposition parties accusing the government of turning a blind eye to the allegations. The Adani Group maintained its innocence and launched a vigorous defense against the allegations. Hindenburg Research's tactics relied heavily on short selling, a trading strategy that has long been a subject of debate and controversy. Short selling involves borrowing shares of a company's stock and immediately selling them in the market, with the hope of buying them back at a lower price in the future to return to the lender. If the stock price goes down as anticipated, the short seller profits from the difference. Critics argue that short sellers can manipulate markets, spread false information, and profit from the misfortune of others. Short sellers, on the other hand, argue that they play a vital role in exposing corporate fraud and holding companies accountable. Hindenburg Research's success in uncovering alleged wrongdoing at several companies brought the debate about short selling to the forefront. Supporters of the firm argued that their work demonstrated the importance of short sellers in a well-functioning market. However, critics argued that Hindenburg's tactics were often aggressive, and that their reports could inflict significant damage on companies, even if the allegations were later proven to be false or exaggerated. Section 4. Beyond Adani, Hindenburg's legacy of investigations. While the Adani Group controversy brought Hindenburg Research into the global spotlight, the firm had a history of taking on powerful companies and exposing alleged financial improprieties. One of their most notable investigations involved the electric truck maker Nikola Corporation. In 2020, Hindenburg published a report accusing Nikola of misleading investors about its technology and progress. The report led to a Securities and Exchange Commission investigation and the eventual resignation of the company's founder, Trevor Milton. Milton was later charged with securities fraud and convicted in 2022. The Nikola case became a prime example of how Hindenburg's investigations could have significant real-world consequences. Hindenburg's targets were not limited to publicly traded companies. They also scrutinized private companies considering going public. In one instance, Hindenburg published a critical report on the electric vehicle battery maker QuantumScape just days before the company was set to go public through a SPAC merger. Section 5. Open source activism, Hindenburg's next chapter. Despite closing its doors, Hindenburg Research is not disappearing entirely. Nate Anderson revealed plans to open source the firm's research methodology in the coming months. This move aims to empower others to conduct similar investigations and hold corporations accountable. By sharing their knowledge and techniques, Hindenburg could inspire a new generation of investigators to take on corporate wrongdoing. The open sourcing of Hindenburg's research methodology could also have implications for financial journalism, empowering journalists to conduct more in-depth investigations. This could lead to more informed reporting on financial matters and a more transparent and accountable corporate world. As Hindenburg Research closes one chapter, its legacy is likely to live on through the work of others inspired by their fearless pursuit of truth and accountability.